Do you know how much money your business is really making? Do you understand the difference between profit and cash flow? Sorry, just going to adjust this so I'm actually looking at the camera a little bit more. Welcome. It's Tax Tip Tuesday with me, Christine Walters from All Inclusive Accountants on January 4th. Welcome to the very frigid new year, especially here in Calgary. It's like minus 27 or something out today. And with the wind, when I looked this morning, it's like minus 39. So there is no way that this family is going outside today. That snow is just going to have to wait another day or two before it gets shoveled. So all small business owners need to develop a clear picture and understanding of their business's financial health. This is where understanding the difference between cash flow and profit can allow you to build a stronger foundation in your business and expedite your future successes. So first thing, a business's profitability, that is the bottom line, revenue less all of your expenses, your profit or loss, if you've got more expenses than revenue, is only one part of having a successful business. The second part is understanding where the cash actually goes. This is understanding your cash flow. A business can be profitable on paper and have positive cash flow. The easiest example of this in recent times is that CEBA loan. One of the main qualifiers for this loan was having payroll in your business of $20,000 or more. There were no requirements to have reduced revenue, to be shut down due to local health restrictions because of COVID, or anything like that. So some small businesses got $60,000 from CEBA, and both their revenues and their profits stayed the same, but the cash flow increased when they got the loan. A business can be profitable on paper and have negative cash flow, that is using more cash in their business than it is taking in revenue. So for example, when your business purchases a new vehicle, let's say you take $25,000 from the business bank account to make the purchase, the business cash flow is negative, but the profit is hardly impacted because the vehicle is an asset that is going to be expensed over many years. A business can also not be profitable or be losing money on paper, but still have positive cash flow. A good example of this is when the owners of a business are using personal funds to cover business expenses. Cash flow is positive because the owners are injecting money into the business to cover these expenses, but that cash itself is not coming from the business. And finally, a business can be losing money on paper, that is not profitable, and have a negative cash flow. This is very common during the startup phase of a business. An example is when your clients are late paying you, or you're just not quite busy enough yet to generate enough revenue to offset all of your expenses. So therefore, you end up using credit to cover your startup expenses. Your startup expenses are high, causing your business to be losing money on paper, and your incoming cash flow is negative because your clients are late paying you, or like I said, you just don't have enough clients yet to increase that cash flow. Understanding how your profit is calculated and where your money is ultimately flowing to is one of the things that will help you get ahead faster. So my challenge to you is to start this new year in style. Let's get your business set up on the right track right now. Throw a comment down below in the comments there with the hashtag replay if you're ready to make 2022 the best year yet for your business. And I hope you enjoyed this week's Tax Tips Tuesday with me, Christine Walters from All Inclusive Accountants. Come back next week for another tip, and I hope you enjoy the rest of the frigid week that's in store for us.